Hey, friends. I'm Liobing. Let's cut to the chase. Quick question for you. Have you ever had that feeling? Waking up suddenly at 3 a.m., grabbing your phone, and seeing Bitcoin has gone parabolic again. And your heart just sinks. It feels like you've perfectly missed out on another billion-dollar opportunity. Or maybe the opposite. Have you felt your heart pound in your throat, staring at a screen bleeding red? Feeling like your hard-earned money is just seconds away from turning into a meaningless string of code? When it pumps, you fear missing out. When it dumps, you fear it's going to zero. This horror story, isn't it the daily life for us regular folks in the crypto world? Today's core question is simple. Is this crypto bull run, the one that's made countless people rich and countless others broke, actually over? More importantly, by the end of 2025, what will Bitcoin and Ethereum, the two big bosses, actually be worth? Today, we're doing a deep dive. We're going to break down the logic behind it all, piece by piece. First, we need to understand the engine of this bull run. Imagine it as a cosmic-level space race. The first and most powerful rocket booster is called the Bitcoin halving. It's not complicated. Just think of it as the salary for Bitcoin miners getting automatically cut in half every 4 years. This means the number of newly produced Bitcoins is suddenly slashed by 50%. When something becomes scarcer, but the number of people who want it stays the same, the price naturally goes up. Historically, every halving has been followed by a major market rally. It's almost become a predictable pattern. The second booster is Wall Street's regular army is marching in. It used to be that the big shots in suits on Wall Street thought crypto was just kids' stuff. But now, not only have they jumped in themselves, but they've also created something called a Bitcoin ETF. What does that mean? Let me give you an analogy. Before, if you wanted to buy Bitcoin, you had to go to some punk rock website. The process was complicated, and you were scared of getting scammed. Now, with the ETF, it's like an officially licensed Bitcoin store open right downstairs from your apartment. You can buy it directly from the same account you use for stocks. It's safe and convenient. This has unleashed a flood of new money and new people into the market. But here's the problem. If the fuel is so potent, why does it feel like the rocket is flying so erratically right now, going up and down? Because in this financial universe, there isn't just rocket fuel. There's also a powerful force called gravity. And the one controlling this gravity is the infamous Fed police. Think of the Federal Reserve as the administrator of the global money faucet. When the economy gets too hot and the monster of inflation is about to escape, the Fed police tightens the faucet. That's an interest rate hike. There's less money in the market, everyone's wallet feels tight, so who has extra cash to throw at high-risk assets like Bitcoin? As a result, the market's gravity increases, and prices are naturally pulled down. Conversely, if the economy is too cold, they'll open the faucet with a rate cut. Money becomes abundant, and people start looking for high-return investments again. The crypto market could take off. So, you see, we are stuck right at this critical juncture. On one side, we have the powerful rocket boosters of the halving and ETFs desperately trying to push prices up. On the other side, we have the Fed police acting as a gravity controller, constantly adjusting the pull. They are in a tug-of-war, and whoever wins will determine the market's direction. Alright, now that we understand the macro backdrop of this space race, let's look at our two main characters, Bitcoin and Ethereum. They are often mentioned together, but their stories are completely different. Bitcoin's story is digital gold. In this chaotic financial universe, it's like a constant star. Its total supply is fixed at 21 million coins, and no one can change that. Its core value propositions are scarcity and consensus. When people feel that real-world money is losing its value, they look to convert their wealth into Bitcoin to hedge against inflation. So, it acts more like a safe haven asset. Many large corporations and even some countries have started hoarding Bitcoin just like they hoard gold. Because of this, Wall Street analysts are in a heated debate over its price prediction for the end of 2025. The optimists, like Standard Chartered and other analysts, believe it could surge to $200,000 or even to $150,000. They think the institutional money from ETFs is a bottomless well. The more conservative ones see it around $150,000 or $160,000. Of course, There are even more cautious voices who believe that if the global economy struggles and the Fed doesn't turn on the money printer, it might just hover around its current price, or even lower. Overall, Bitcoin's future largely depends on how widely institutions and nations accept its identity as digital gold. Now, let's talk about Ethereum. If Bitcoin is digital gold, then Ethereum is the universe's supercomputer and construction factory. Its story isn't about scarcity, it's about utility. Almost every trendy crypto concept you hear about today, DeFi, decentralized finance, NFTs, on-chain gaming, the vast majority of them run on the Ethereum highway. Every transaction, every interaction, requires Ethereum as gasoline. So, Ethereum's value isn't determined by how many people are hoarding it, but by how vibrant its ecosystem is and how many people are using it. Ethereum is also undergoing major upgrades aimed at making its highway wider, faster, and cheaper. And just like Bitcoin, Wall Street has prepared ETFs for it, meaning institutional money is ready to pour in. Price predictions for Ethereum at the end of 2025 are also wildly divergent. An analyst from Standard Chartered boldly predicted it could reach $14,000. There are even more aggressive forecasts, like from Tom Lee, who sees a range of $10,000 to $15,000. But other analyses suggest its price will be between $4,000 and $7,000. The outcome depends entirely on whether its tech upgrades go smoothly and if applications like DeFi and NFTs can become wildly popular again. Alright, Liobing time. So, is the crypto bull run over? The answer is, it may not have ended in the way we imagined. Instead, it has entered a new phase of tug-of-war. On one side, there's immense upward momentum driven by technology and capital. On the other, there's the powerful gravitational pull of the global macroeconomy. No one can give you a definitive answer for the price at the end of 2025. Bitcoin could be anywhere between $70,000 and $250,000. Ethereum could range from $4,000 to $15,000. The final result depends on which side wins this cosmic tug-of-war. It sounds like a gamble, right? But remember, the essence of any investment is a game of probabilities based on information and logic. What I've given you today isn't a secret password to wealth, but a map to help you understand the rules of this game. The real question isn't how high will Bitcoin go. It's which story do you believe in? Do you believe in the digital gold story? Or the world computer story? Or do you think this is all just a fleeting bubble? Drop your thoughts in the comments below. If you found today's content even slightly enlightening, don't forget to like and subscribe. I'm Liobing, and I'll see you in the next video.